AT&T shares little changed right now. That's even after the telecom giant came out with earnings per share that beat estimates and actually saw strong subscriber growth at the unit it's offloading. Of course, that is Warner Media, HBO and HBO Max subscribers rising to a total of 47 million. Let's bring in Craig Moffett to talk about all of this. He, of course, is co-founder and senior analyst at MoffettNathanson. It's good to see you, Craig. Thanks for being with us. We learned from AT&T and Verizon yesterday, price war seems to be continuing apace, or should I say the promotional war continuing apace between the telecoms. Where does that end? What's the outcome of that between the two companies? They seem to be gaining from it, but how long can it continue?
Yeah, look, it's a great question. I think the real question right now is how long industry subscriber growth remains at these kind of stratospheric levels. I think it's a fairly non-controversial starting point to say that we're reasonably close to saturation of wireless in the United States. That is, we've very long been at the point where almost every adult has one. So you ought to expect, that being the case, that the growth rate in phone subscriptions is something like population growth rate. There's probably a little bit of a boost to that for kids getting younger as they get their first phones and what have you. But right now we're seeing growth at about 5 times population growth rate. And that is clearly coming from promotional activity that is giving customers an incentive to take buy one, get one free devices that they need to take an extra line on that they don't actually use. That's not sustainable for the long term. So what you're seeing right now is everybody benefiting during this kind of super normal period with stimulus checks and buy one, get one free offers. But when growth comes back to something like normal for the industry, I think it's going to expose some real weaknesses in the competitive dynamics of the industry, because AT&T is spending an awful lot to sustain the growth that they're getting. And in the last quarter, for at least 6 weeks or so, Verizon was too.
Craig, why do you still rate AT&T at sell?
Well, it's funny. We had been at a sell rating for, about 2 years or so. Actually, we put the sell rating on as soon as the Time Warner deal closed and said the amount of debt they had taken on was ultimately going to be so debilitating that it would bring them to a dividend cut. And I used to say that I thought that once they made the dividend cut, that there would be an opportunity to buy AT&T shares and that it might actually turn attractive. Unfortunately, when they did the dividend cut a few weeks back, or I guess it's now about a month or so ago, when they announced about a 45% cut to the dividend, the stock fell, not quite as much as we had thought or even hoped to give a buying opportunity. But remarkably, their free cash flow guidance that they're basing their new dividend sustainability on is still probably significantly higher than they're going to be able to achieve. And so we came away from this thinking, as hard as it is to imagine, the dividend already looks like it is stretched even at the new roughly half the rate that it used to be. And so the stock still looks to us to be overvalued.
And Craig, your latest commentary on the stock, it's kind of outlining, okay, so they bought into maybe the media hype cycle at that top. Now they're coming back into wireless at the top of that cycle. What does AT&T look like? What could it look like? What can it even look like, in your view, 5-10 years out?
Well, it's a smaller and more humble company, that's for sure. The real challenge is that it's not like you can wash your hands of the media business and then say, well, what's done is done, no harm, no foul. There's been a lot of long-term damage to the business. The balance sheet problems that AT&T brought on in the Warner Media deal have meant that it is now way behind T-Mobile as we enter 5G. And I think that's a problem, frankly, for Verizon as well. Verizon did not skimp on spending. They have continued to be aggressive in trying to maintain their network advantage. But they made a big bet on millimeter wave spectrum. And T-Mobile now looks like they have pulled ahead of both Verizon and AT&T and sustainably so in network quality. And it's very hard when your prices are, 16% or so higher for the average phone package than T-Mobile's, and yet T-Mobile goes from having a weaker network to now in 5G having the best network of the three. The other problem for AT&T and frankly for Verizon as well is that AT&T has now, I think, quite ill-advisedly entered into a network wholesaling agreement to Dish Network that threatens to make Dish a much more aggressive and threatening competitor. And so the future competitiveness of the industry looks like it's getting worse rather than better at exactly the time that AT&T is pivoting back to wireless.
You know, Craig, to sort of circle back to my original question, then it sounds like this is all going to be maybe mean lower prices for consumers over the long haul, which is good news for consumers, but does mean a kind of fundamentally different kind of telecom business.
Well, I don't know, unfortunately, whether it's actually a fundamentally different type of telecom business, because the telecom business has been kind of a lousy industry for a long time. In a lot of ways, it's just following the segment that you just had with the airline industry. It's a lot like the airline business in a lot of ways, in that it has very, very low variable cost, high fixed cost. And so it tends to have a lot of volatility. But it's, I think we all grew up in a period where the wireless industry was a hyper growth business. It's not a growth business anymore. The industry grows at below GDP, and it has for a long time. And if you're Verizon and AT&T, you're in an industry that's growing at less than GDP, and you're a share loser. And that's also been true for a long time. That's a tough reality. And frankly, as an investor, it's a tough way to make money in those businesses.
Well, people aren't making money on those shares today, that's for sure. Thank you so much, Craig. Appreciate your time this morning and your expertise on this subject. Craig Moffett of MoffettNathanson.